My sound is low.
Maybe it's just me. Like I have it all turned up.
Hmm.
All right, say something.
What's up, everybody? I'm
Okay,
Mark Monroe,
I fixed
and
it.
this is your come up.
I fixed it. All right.
While we're live. Okay, got it. All right.
That's
Without
fine.
further ado, go ahead and cue that intro. All right. What's up, everybody? I am Mark Monroe, accompanied by my wonderful co host, co producer, co creator, and all things galactic. Give it up for none other than the wonderful.
It's Jalen GC in the place to be. What does it, cousins? On this fine Tuesday, we have exactly 30 minutes. So buckle up.
We do. And this is executive education where we are going to definitely, we take the gloves off and give you nothing but knowledge so that way you can apply it tomorrow or any other day. That's called value. All right. So without further ado, make sure you like, comment, and subscribe down below. And for real, we listen to your questions. And if you do have questions, go ahead and put them down in the comments and we'll get back to them later if we can. And of course, we're active in the chat. Shout out to Uncle Charles for being first in the
Yes.
chat with the let's go. And we got a lot to get into. And it's kind of like since we're in our final quarter for our lives, I felt like this is kind of like really interesting, to kind of like go back and then just like kind of like do a little bit of the housekeeping pieces just to clean up a little bit, Jolene. So, one of the things that we've talked about before, two of the things that we talked about before was definitely thesis. So having a thesis before essentially you step out there into the marketplace, and then that thesis is either validated or essentially it's unvalidated. So we taught that part, and then of course, so whether you're bull or bear, those are parts of thesis. Whether you're looking at, for example, projections, all those things for a company's earnings. Looking at, for example, what is it that you expect that's coming down the pipeline as it pertains to products and services. Those play into thesis, and then on top of that, putting together whether or not essentially that it's value enough to essentially buy the stock or to ultimately participate with the stock as a trader or as an investor. Those things all build up a thesis from what is it that we see from performance and everything else, and we analyze that, dissect it, and put it together. Now, sentiment, Jolene, is something in which that it's
Well,
kind of like that fine line. It's that fine line in between
mhm.
versus wants versus needs.
But also
uh,
it has a lot to
go ahead.
do with like the mood and the vibe of investors, like what investors are thinking of at the
It's
time.
true.
So I think of it as, like that emotional indicator. But the thing
Hmm.
about sentiment though that we got to keep in mind is that there's a short-term impact and there's also a long-term impact. And so if you think of approach sentiment that way, it kind of helps. But one of
Yep.
the key things, like the benefit of knowing the market sentiment is it impacts like your investor decisions maybe.
Hmm.
Um, but you don't want it to be something that, because again, it's kind of emotional based. So you don't want it to be something that totally derails everything, but it can aid in seeing where the market may be moving to, like what direction. And there's a whole bunch of other
Correct.
things too.
Yeah. So a lot of times, like most of your traders look at technical analysis, and I'm probably sure that every trader will tell you that news can easily trump technical analysis any day of the week.
Yeah.
Um, and then it's like, when you think about that news, it's like when the news hits, it's kind of like that news sentiment reading of what's everybody's temperature reading of what's
Hmm.
happening now. And you see it a lot also during earnings season, right? So, for example, a company does terribly in its earnings, like where it's like, okay, investors thought this based upon their thesis, and then company reported this as it
Hmm.
pertains to the reality. And then we have sentiment, what everybody's feeling. It's like, can I get a heat check in the room? That's typically what you would consider. sentiment. And so it's kind of interesting because this one is kind of like a subject that I've been kind of like holding pretty close to the chest as it pertains to the two of them butting heads, the verses. Because in 2022, now we all experienced or saw what took place in the market in 2022. Great companies still being great. So, their math was still mathing. And then, the Fed started Fedding. And then of course the market said, hold up, this is not what was part of the plan. This is not a part of this wasn't part of the assignment. And then of course you had hedge funds as well as many other different, institutional side. They were like, look, no matter what you're telling us, we still want to short.
Yeah.
even if you expect a great year, look, we just want to short. And that's exactly what happened. So, the reason why I say that this is an interesting subject for me is because a lot of my thesis as it pertains to companies, so the companies that I normally look at or the companies that I examine and analyze on a consistent basis that I typically follow and track, my thesis was 100% spot on as it pertains to what is it that they were going to do as it pertains to company earnings, what is it that I expect as it pertains to their growth, all those things. And that's probably the reason why 2022 hurt me so badly, is because of the fact that my thesis was so correct, but yet at the same token, listen, the market did not care about Mark's homework. It was just like, look, I know that you got every single answer correct on the assignment. You still failed. That's honestly.
That's wild though. But Mark, okay, so let's back up a bit. So, throughout the matrix and all that, when we talked about forming your thesis and learning all that stuff, and we talked about pivots. So when you're thinking through your thesis, right, when do you factor in, or how much does sentiment play into the rules that you'll create around pivots for your particular portfolio?
In the matrix, I actually had this exercise that I would take people through where I would literally have you put together what is it that you project over the next year or over the next 2 years. And then I would make you give me the reason why you believe so. And the evidence in which that you had to give me was ultimately concrete. So the whole objective of that entire exercise was built upon what is it that you knew about the company. So fundamentals, you can even throw in a little bit of technical analysis if you want to, but it was really down to fundamentals and then that qualitative, quantitative data. But then I always it was that was the if and, right? So if, XYZ takes place, then these are the things in which that I expect and blank. But there was an or, and that or really recommend that or was the thing that was kind of at the end where the sentiment kicked in. So if this does not work,
right,
if
things don't go your way
and this don't work, then what is your backup plan? What is your pivot plan? Or what is your pivot period? And what will work and what will work against this? So what normally will work if this isn't working? And so, for example, I kind of looked at it in the sense of if companies like Tesla, right? Let's take Tesla as an example. An EV company like Tesla, if Tesla isn't doing well, and especially given that it's an EV, innovative, renewable energy type company, if that isn't working, then what must work? And one of the things that I've consistently written down was I always looked at it as a, taking off of Elon's words, he wants to give a huge smackdown to internal combustion engines and also energy companies. And so if Tesla isn't working, then energy must be working, and sure enough, what happened in 2022? Energy was moving Devon Energy, ticker DVN, OIH, the ETF. I mean, look, those things were on point. But it's I look at it in the sense of, that's the sentiment, but it's it gets even further, right? Because, let's take into consideration today.
Yes.
For example, tomorrow we're going to hear news from the Fed. So now is the market trading on what is it that everybody's thesis is. Like, is the market thesis really playing out, or is the market is the market trading on sentiment? Like,
Well,
that's the question.
that is the question. But also, Mark, whenever the Fed is about to talk, there are going to be those, and I'm thinking of like how sentiment impacts institutional investors versus retail traders, right? So oftentimes the sentiment will not impact, like, let's say the Fed's going to talk, like tomorrow, the Fed's going to talk.
Yep.
When you're investing for the longer term, the sentiment's not going to impact you as much. But if you are day trading and the Fed produces, something unfavorable, let's say that their words are hawkish, then all those day traders, they are going to be in their feelings, basically, right?
So let's challenge that. Let's challenge that, right? Because you're saying if you're long term, right? Now, when you say long term, let's establish some rules to this game.
When I say long term, okay, if I'm thinking of it from just investor or institutional investor, so their thesis is 3 to 5 years out, right? But they also have performance for the year. So they have certain targets that they're trying to hit.
Correct.
So if you're just looking at it from the year, and the Fed is saying something that's hawkish, depending on what it is. So let's say that they completely change policy and completely change direction. Well, that's going to impact you regardless if you're institutional or retail.
Correct.
So, like, for example, Mark,
you knew where I was going with this. This is how I know that you spent time with me in the Matrix.
So, Mark, was it last year? No, all the years. No, maybe it's 2021. So when we were talking about like transitory inflation, and that was like the buzzword, and it's like, okay, it's going to be here and then it's going to transit out. And that wasn't the case. It became entrenched. So if you're looking at sentiment from that time frame, this is a good example that illustrates how it impacts the longer term trade versus a shorter term trade, because what the Fed said didn't bear out. The Fed actually, bless their heart, they were wrong. It was not transitory inflation. It was entrenched, and entrenched is much worse because it takes much longer to get out of that economic trench, right?
Is it still not transitory though? Oh Lord, here we go. Okay, so Vic is on one tonight. Okay, Vic, I'm sorry for giving you PTSD from the Matrix. Okay, I know you got cooked, but
everybody got cooked.
Okay,
so I'm getting cooked.
Okay, all right. So check it out. Let's say, for example, like we said that the Fed said it was transitory, but here's a challenge to that, right? And this is one of the things that even a person like me that's been in the market for X amount of time, is like you can still learn so many great things. Like for example, when Jerome Powell said, we believe that inflation is transitory, he never gave us a timeline.
That's true.
Like the Fed never gives us a timeline. And so one of the things that I've learned is that the Fed normally, when they tell us something, it's not in the sense of that they're looking at it over the next 12 months. That's never the case. They're probably looking at it over the next 3 to 4 years, because when you think about policy and also how long it takes for policy to really move itself through an entire system, it could take anywhere from, let's say, on the very, very low side, which is like, let's say quantitative easing. That's something that literally comes in now, but it still has its layering effects over the next 2 to 3 years, as we've all witnessed. And then on top of that, it's like when we see quantitative tightening, the same rules apply, just depending on the speed in which that they start to tighten. But when you think about transitory, we could probably still be in that whole transitory narrative. I think that the reason why you can't say transitory now, because of the fact that it just puts such a bad taste in everybody's mouth. Like, okay, you just made everybody just drink vinegar, and then it's like now you want to bring it back up, and it's just going to automatically give people PTSD, just like Vic has in today's episode. So those are the things in which that we look at. But then, okay, when we think about sentiment, right? So let's look forward. Because I know a lot of folks on here are like, okay, hey, Mark, that's great. We're talking about 2022, but let's talk about the future, right?
Well, can
Okay,
we talk about
so
now first though, before we get to the
sure.
future? Because like right
Which
now,
part do we want to talk about? Do we want to talk about the Fed now?
well, not even just the Fed now, but just the sentiment right now. Like
Okay.
right now it's
So
pretty much split down the middle. So that
so yeah, sentiment is very much so split. On one side, you believe that valuations are completely stretched, especially since you've been led by what they're deeming as the Magnificent Seven, most of them tech companies that have been literally throwing on the cape for the market. Earnings themselves have come out fairly strong across the board. I mean, I think we had 72 out of the 72% of the companies in the S&P 500 beat on the top and bottom line and have had great earnings so far for 2023. But then you also have the other side of the table that believes that, okay, hey, though that they're doing good and they're stretching things, but the consumer is waning. We're seeing that, employment is also starting to take hits. We're also starting to see that, essentially we're going to start seeing things in the real estate market outside of the commercial space that are taking hits. And we're also seeing that energy is up. So ultimately, like, okay, hey, what do those values look like? We're still seeing inflation still lingering, though that it's coming down, but it's not coming down at the speed that everybody expects. So it's kind of like, okay, hey, well, it's anybody's game right now. And it just happens to fall around the same time where we think about also where we are in the cycle for the year, which is on average when you're in August, September, it's normally about correction slash retest time. And essentially from there, it's like, okay, hey, well, then you also have the other side, like, and it's like the folks on the side that are bullish that are like, okay, hey, we still expect things to go up. On the other side, you're like, okay, people have been in positions for about a year and a half, especially on the institutional money side. So now they're ready to take profits. And instead of taking that 34 or 35% haircut along with their 20% management fee, they're probably looking to exit out of positions at a 15%. And so, and then on top of that, you got guys like Ken Griffin of Citadel coming on and saying that we're in the 7th and 8th innings. And it's like, okay, well, what did he mean by that? If he's a market maker, should we really be worried? And so there's either way that you look, on one side, you can say, okay, hey, but meanwhile, companies like Apple are having great sales reports right now as it pertains to their pre-order sales for iPhones. But on the other side, you're seeing companies like Target and wholesale companies like Costco that are telling you that, hey, prices are still inflated. And also we're starting to see it within our consumer numbers or within our revenue bottom line, where it's also hurting us as well because we're seeing cracks within the consumer. So again, it's like, it's a mixed bag. And that's where it comes down to the part where it's like, okay. And then of course we have the Fed looming over, like, okay, hey, we have the September meeting or we have the September results tomorrow, because I'm sure that they've already made their decision. And then on top of that, we also have the November decision for Fed rate hikes before the year is out. And where does that place us? And then of course we have earnings that is like literally right around the corner of like, and technically this is around the time, especially for a lot of those Magnificent Seven, where it's like the quarter before everything gets popping. So it's like we don't really expect like, we don't expect like, it's kind of like if you think about it like a party wise, it's kind of like, okay, you have your early people who come in that are just trying to get a good seat and everything else, but nothing's going to be really popping off until like the real crowd shows up. So it's kind of like that mixed bag right now where it's just like it's anybody's game. It like anybody can make a case for a bear case to say that, okay, hey, yeah, this is the best that we're going to see and we're probably going to go down. But then on the other side, you could say that the S&P is trading at, 19, 20 times earnings, forward earnings, if you calculate every single company in the S&P 500. And that's kind of like the number that they're putting together, which means that I think that's the equivalent of a 10% upside in the S&P 500 marker right there. So if you really think about it, it's anybody's game. It's anybody's game. And so sentiment right now is highly mixed.
Right, which makes it, that's where, okay, so that's where when sentiment is mixed, then this is where fundamentals come into play.
Yes. So that's where your thesis comes into play, where your thesis, like now, mind you, you're going to have to live or die by your thesis. Because, like, here's the thing about a thesis. A thesis can be very, very right, or it could be a death by 1,000 cuts. So, for example, your thesis, like, what's the one thing that we know about a thesis? It could be 100% spot on correct, and then ultimately the market agrees, sentiment agrees, and essentially, the market goes where you believe. Exactly.
Mm-hmm.
Now here's the death by 1,000 cuts. You could be right in your thesis, and yet the market says we're going to go a different way.
Right.
Then you could be completely wrong, and the market says, yeah, you're totally wrong, and it goes the opposite way. But then there's this other one where it's just like, you could be right, and then it's like the market's just like, meh, like, okay, it's not bad, it's not good, but it's just like, okay, it's just like we're just trading in a zone, like sideways, so nothing really happens. So again, that's why I said it can kind of feel like a death by 1,000 cuts in multiple different variations as it pertains to a thesis. But here's the thing. I don't want you guys to be scared as it pertains to having a thesis, because having a thesis is better than having no thesis at all. So when you talk to traders, whether you're a day trader, swing trader, or long-term trader, everybody has a thesis, whether it's built into their trading plan. Like, you can kind of feel like the sound, like you could see how sound a trader's thesis is based upon, like, one of the things I look at for short-term traders and swing traders, a lot of times the sound traders in those arenas, you hear the thesis within their trading plan. Like the thesis is really baked into their trading plan. So whether they're looking at purely technical analysis, but also understanding the entire landscape around them, like you start to see the thesis, and so everybody's like, okay, hey, well, Mark, what does it not look like when you don't have a thesis? Well, I'm going to buy it because so-and-so said buy it, or I'm going to buy this because of the fact that I see everybody else jumping into it. And it's like, I see it going up. And then it's just like, okay, that's not a thesis. That's just ultimately either FOMO or you're just following the crowd. And that's something that's highly, something that's highly unrecommended. So having a thesis, and for me, like what my thesis is knowing as much as I can about a company's past, but not letting the past dictate, but more so in the sense of understanding, is there a bright future ahead of it? Or is there no future ahead of it? So let's give you a thesis. I'll give you guys an example. Drums, please. All right. So a thesis is, let's take a company that just recently went public. I'll take the tale of two companies that just went public. We have ARM and we have Instacart.
Yes.
Okay. Now, Instacart, we'll start with Instacart since they're the most recent company that went public. So they just went public, and I think they had a solid raise. I think they started off at $30 a share, and I don't know what they closed at, but I think at the height or something like that earlier today when I heard it, it was like $42. So congratulations. So here's my thesis on Instacart. I believe in my thesis that Instacart took too long to go public. And I think that they're going to struggle a little bit after they've gone public, though that they can come out with other things to, say, for example, find ways to monetize. Like, for example, they brought in like family sharing within the Instacart. So it's like you pay one subscription for everybody to utilize it. And that's great. And probably even get more stores or retailers to get on board. And that's great too. But I think the thing is that, you really start to look at it and it's like, okay, well, but where's the ultimate growth here for Instacart? Like we're kind of like are we at peak growth right now? Like, so, which means, have we seen the best of what Instacart has to offer? And my thesis says yes. My thesis says, now, doesn't mean that they're going to be a bad company or anything like that. But my thesis, which makes me a little bit bearish on the stock, outside of the fact that it's gone IPO, and most companies that go IPO normally struggle in their first year. But my thesis is that they took too long to go public. And so a lot of that value, as it pertains to like having those growth levers that they've already pulled, they could have utilized within the publicly traded markets and been rewarded from that valuation wise. And all the while that they did that earlier, and where we are today, the market would have given Instacart a pass as we wait for what is the next thing, if there isn't next thing. And so that's the challenge that we're going to start seeing with companies like Instacart that are going to the publicly traded markets too late after they've already gone through all this massive amounts of growth. And that's going to be a major challenge. That's where my thesis is. Sentiment, people are going to probably still buy Instacart because of the fact of, one, they probably use it, they see it, and then on top of that, it's going to be a true. I think you now have a new indicator as it pertains to the retail consumer because of the fact of what you're seeing. Like, we're getting some of those reads within Uber Eats. I think we're going to get the ultimate trend here with Instacart. So we have Uber Eats, DoorDash, and now we have Instacart. The problem is that you have Instacart and DoorDash now stepping into Instacart space.
Yeah.
You don't see Instacart stepping into Uber space. So, I said, there's some challenges there. There's some challenges there for, let's say, Instacart. Now, let's look at Arm. Now, don't get me wrong, they're both tech companies, so let's not shoot the messenger here. But here's the reason why I'm bullish on Arm. The reason why I'm bullish on Arm, and here's my thesis behind it, because Arm has made its bones for X amount of time by playing nicely with all the other companies. Now, they didn't have to play nicely, but they chose to, and that's been kind of like their mantra of they're like this universal provider of everybody. I think that this is going to be something that investors on a sentiment wise are going to like, because they're like, okay, hey, we see that they're partnering with this company. They're partnering with this company. They're doing business with this company. We like the fact of seeing that they're doing lots of business. The only thing that could possibly be a knock towards Arm is, are they doing enough business as it pertains to generating enough revenue that literally puts it into the conversation of the other semi-chip players in the world? If it does, then that could be very interesting. But and then of course the other part to that could be a potential red flag is could there be any external influence from China as it pertains to Arm? Now, so far, we're keeping all of those things at bay. So, but watching you out the side of my eye. But for the most part, like that's what I see. I see that there's still a lot of growth potential. And as I see that this industry also continues to keep growing, that they're going to have a foothold in it because of the fact of the players that they play with. Now it's just a matter of their conversation is more so an earnings growth story. Can they continue to grow their earnings by improving profit margins, improving process, and then on top of that, getting more and more of those deals in which that people do business with? And then, of course, when we look at it from an economic sentiment perspective, well, as the global economy gets better, from this lullaby sleep and slumber that it's been sitting in, it changes the entire sentiment. Why? Let's look at a sentiment, shall we? PC sales, pure defining of sentiment right now. Hence the reason why we see companies like Intel and AMD that have taken significant hits, but versus Nvidia that has done very well because of its AI portion. If Nvidia didn't have an AI portion to this,
flatline.
They'd be sitting back sipping their tears just like AMD and Intel are this year. Oh, that's one of the rare ones where you have to catch me to hydrate. So when we look at it from that perspective, right? Like that's what we define as it pertains to what is everybody's feeling right now? What is everybody's heat check right now? The heat check on the market this year has been all about AI this year. Companies that are doing AI business, you can see that like now here's going to be, now remember, with every heat check, you got to check the temperature. So in 2024, I think that those temperatures are going to get checked. We're going to get checked. We're going to see, okay, hey, whose AC and whose HVAC is really working? Like, whose AC and HVAC is really working? Go ahead.
So I was going to say, that was great breaking down like the thesis and also showing like how sentiment plays into all that. So just so that everyone, is on tracking here. So the kind of things that you're going to look at for sentiment when you're forming like what you think sentiment might be, you want to look at economic factors. You heard Mark talk about China. So you want to look at geopolitical factors. You want to look at, we talked about the Fed. So you want to look at interest rates. We know that there's going to be some more hikes coming up. So that's something else to look at. And then you also want to look at earnings growth. So all those things kind of factor into like how the sentiment is formed. But then also, Mark, there's also like technicals. you know, like
Mm-hmm.
when we talk about price movement, and we talk about just looking at things that might,
Inflows, outflows.
yeah, like also just taking a general survey or poll. So we already talked about how right now there's a neutral, or the market is neutral as far as sentiment goes, because it's split down the middle between those who think it's going to be bearish and those who think, or who are bullish. You can also look at put call ratios, which
Mm-hmm.
also shows like, okay, are people, if someone's going to, if there are more puts, that means that they're looking for it to go, you know, to
But then
decrease
it's
the stock price and
but
move.
then it's like that. Those kind of like scare me a little bit, Jolene, because I always sit back and ask myself,
Mm-hmm.
how many people out there are gambling? Like when
I
when
feel
I
like
sit back and think about it,
99%
like
are gambling, Mark.
shout outs to Bar Chart also, because they posted something where they said 13 out of 100 gamblers actually
Mhm.
walk out of the casino with money, with earnings, like with winnings. 1 out of 100 traders walk out of the market profitable.
But I wonder if that is based off of, is that like based off of like day trading?
Mm-hmm.
Is that okay? Because
It really
that
kind
makes
of puts it into
sense.
perspective, doesn't it?
Yeah, it does. Because when you take the time to build your thesis and you're looking at it more, you know, long term, your long term vision is really based on fundamentals. It's not
True.
it's not as susceptible to sentiment changes based on smaller factors like how everyone's feeling during, you know, the holiday period. Are people spending, are they not spending, all those different things. But it can get kind of, you know, choppy, a little dicey. So that's why it's important to establish with fundamentals what your thesis is, and let your
Correct.
thesis guide your decisions in the
Yep.
long term. And
And
sentiment
it's
can,
okay, and it's okay to have sentiment in your thesis.
yeah,
It's okay to have sentiment in your thesis. To not have it in there is just like you're just literally regurgitating numbers that already exist. It's kind of like, you know, slight shade without the shades that I'm wearing today because I can't find them for some reason. But it's kind of like Dan Ives, who studies tech and who literally goes to places in tech versus other folks who just like literally read numbers and then literally crunch them and say, okay, hey, this is what we believe earnings are going to be, versus actually getting real world experience. See, that's more so in the sense where it's like your thesis is built upon, just purely just numbers based, but without any type of sentiment, in the realm of it. And so you'll know when the AI trade has gotten a little bit too overcrowded, when you start hearing that people are getting exhausted about hearing about AI. Like I would say that that's going to be the thing to watch in 2024. Pretty soon you're going to see how fast the market ultimately moves on from things. One, but two, you're going to find out how like that exhaustion cycle plays in as well. So where people get exhausted in talking about a specific subject or talking about a specific area. And honestly, that's going to be a very interesting part, because then that's going to separate the true leaders from everybody else, from the rest of the pack. So I would be watching that next year. Now, am I completely bearish on next year? Absolutely not. Do I believe that essentially that certain things will, I guess we'll have to say that for another episode, because I'm already getting the producers' messages from the back end. So, and unfortunately, we do have a hard stop today. But y'all, what do you think as it pertains to your sentiment in the market? So, or just, it doesn't even have to be the stock market. It could be the job market. It could be, say, for example, retail. What is your sentiment? So, for example, I saw the question earlier in the conversation of what is it that everybody's heat check reading is on, say, for example, consumer tech like Apple. How many of you actually bought Apple devices or pre-ordered, even though that they raised the price on the Macs? We're seeing that their Pro and Max, phones are ultimately shining brighter than, say, for example, the standard editions, to put it nicely. So what are your thoughts as it pertains to sentiment? What is the heat that you're feeling in the room? Give us the temperature of what is it that you think, and we'll be sure to comment, or we'll be sure to replying to you in the comments. And like I said, if you like what you heard today in today's conversation, be sure to like, comment, and subscribe, because we definitely want to hear from you. Until next time, I am Mark Monroe,
And I'm Jalen GC in the place to be.
And this has been Executive Education. Thank you guys for sitting down and having a slight conversation with us, but this may be actually a potential to be continued. If you want this to be continued into next week and go even further, go ahead and say continue in the chat or write continue in the comments section down below. We'll see you guys in the next one. Peace.